in the last month. But it's not just here in the U.S. I think a lot of people were surprised to find that Europe is also moving up. We had new highs today in Italy and in Germany and in France. So there's your European ETF. A lot of this is because the bank stocks have turned around there as well. Italy, Germany, France, even Japan also at a 52-week high. So what's going on? A little bit of this is about trade optimism. A lot of people believe that that's going to help the global earnings situation as well. The Fed's with us as well. But we also have had a little bit better economic data in the U.S., Europe, and over in China recently, particularly on Friday. And that's leading to a lot of people say, perhaps we need to look at the idea that 2020 earnings are going to be below expectations. Maybe they're not. If they're in line, up maybe 5%, maybe even as much as 10%, the estimates are then wrong for the market, and maybe we can do a lot better. That's fueling a lot of the optimism. November, it's a good month. Number 2 month overall, up 2 out of 3 times. November is an up month. And remember, this is the start of that best 6-month period when the market notably outperforms. Guys, back to you.
All right, Bob. Thank you, Bob Pisani. We've got a quick news alert here. Steve Leisman's flagging some warning signs in the credit market. Steve.
Thanks very much, Melissa. The Federal Reserve out with its October or third quarter senior loan officer survey shows banks tightening credit standards for new credit cards and for consumer loans, also for commercial real estate loans. These are small percentages tightening, but certainly it's been kind of going in the same direction here and coming amid lower interest rates from the Federal Reserve. They've tightened credit for commercial and industrial loans, reaching a 3-year high, and banks are becoming less likely versus the beginning of the year to approve credit cards for those with low credit scores. Banks are citing low risk tolerance, concerns about repayment from borrowers for these tighter standards. Scott?
Steve, thank you. Well, despite recession fears still swirling, billionaire investor Leon Cooperman told me earlier on the halftime report he's not worried about the market at all-time highs.
The only place I saw euphoria was the IPO market, but that's been corrected. You look at what happened to WeWorks, what happened to Beyond Meats. So the market's been very disciplined. And I would say I think the market's fully valued, but I don't think the conditions for big decline are present.
Also, is it safe to buy at these record highs? Let's bring in Jack Ablin. He's the founding partner and CIO with Crescent Capital. And Hugh Johnson, he's chairman and CIO with Hugh Johnson Advisors. Gentlemen, good to see you. Jack, what do you think about what Lee Cooperman said? Are we fairly valued?
Yeah, I would say we're pretty fairly valued. We've had certainly hot areas of the market. We're starting to see a little rotation into sort of the out of favor areas. So I think that at least what we're seeing is that, this rally is broadening, which is a good thing. And, based on the earnings we're seeing and what analysts are projecting, which may be a little bit high, valuations are. I will absolutely agree with Lee and say they're full.
Hugh, would you be concerned if we had a quick melt up? As Lee mentioned, he might get a little bit bothered about the market at that point?
Yeah, of course I'd be very concerned about it. I agree with him that at least at current levels, we're not significantly overvalued. I think we're about 2% above the levels we should average for the current quarter, maybe about 5 or 6% below the level we should average for the fourth quarter of 2020. So valuation is a little bit stretched, but it's certainly not overvalued. And I think he hit the nail on the head when he said, look, there's not widespread, he called it euphoria. I'll just call it optimism. You don't have the kind of levels of optimism that ordinarily characterize the end of a bull market. But believe me, if we had a significant move, the so-called melt up in stock prices, we had a speculative surge, and we got a big increase in optimism, it became euphoria, then I would say we're probably signaling the end of this current bull market. This bull market's not going to go forever, folks. Trees just simply don't grow to the sky. So too much euphoria is not a good thing.
They can get awfully tall, though, Hugh. We know that. Jack, 3,000 is the target for the S&P that you have. You said it remains intact. We're above that today. Do you need to start raising where you think stocks can go over the last couple of months?
I don't know. I mean, again, it's a year-end number, so it's we're only a month and a half or so away. So no, I feel pretty good about the 3,000. We put that there at the beginning of the year. So all in all, I think the market has kind of followed the path that we had expected. My sense is that it will be hard to get a melt up. I just don't see, especially with the headlines, the the valuation and the earnings for next year, are great for 2019, 2020. But if we look much farther out, one of the things that we require is a 90% success rate in making money over a 7-year holding period. And historically, that was really easy to do with the S&P. Lately, you needed to do it with diversified equities. Nowadays, we actually can't do that anymore. And so we had to take money off the table mid-year. And we're going to stay with our dry powder and use it as an opportunity to get in with a pullback.
But what if I told you, you mentioned the headlines. So let's say we don't get a tape bomb, if you will, on trade. Fed's engaged. Maybe you want to make the case that earnings have troughed, not as bad as feared, and they're only going to improve from here. That's a positive environment, is it not, Jack?
It is, but I will say that what we're seeing in the corporate profit activity over the last few quarters is, beat of very low expectations and then very low number and then tamp down expectations. And right now, analysts haven't tamped down their next 4 quarters. They're still looking for high single digits, and we think that's a bit of a stretch. We likely will see that come down to probably mid single digits, even low single digits. And I don't think that that's necessarily a bearish sign, but it's certainly not one where we're seeing earnings going in the right direction.
Hugh, do you ride this rotation that we've seen lately into these previously underloved cyclical areas, materials, energy, financials, industrials?
Yeah, they're going to be good for a while. They're good now. We see financials especially going to the top of the leaderboard, but you also see technology still performing well. Communications services are doing fairly well. Industrials, surprisingly well. We've seen a rotation back to the so-called bull market sectors, away from the safer sectors like staples, utilities. Very good sign. And you've also seen it, as Leon Cooperman said, you've seen it also in the credit markets. Not only has the yield curve become uninverted, if that's the right word, but quality spreads have narrowed. So the markets are sending us a fairly clear signal, a signal, I might add, that's more or less confirmed. You see money growth is pretty darn strong, and it takes money to drive the economy in the market. So on a near-term basis, and I say near-term, I emphasize that, you got to be somewhat optimistic, but keep in mind, the longest bull market in history, trees just don't grow to the sky. And so sooner or later, this bull market's going to end. It's going to have a bear market and a recession. I don't think it's going to be a bad bear market or a bad recession, but this thing is not going to go to the sky.
All right, we'll leave it there. Good last word. We'll talk to you both
soon. Let me address the credit for a second.
If you could quickly, Jack.
Yeah, sure. We've seen an enormous supply of corporate credit, and the spreads don't compensate it. Very similar to what we saw in very minimized, but what we saw in the housing thing. We've shifted away from corporate credit to household credit. A lot of mortgages. We think the household sector is in great shape. Corporate probably oversupplied.
All right, it's good to talk to you both. I know we'll see you again soon. Jack Ablin, Hugh Johnson.
McDonald's shares lowered today after the company fired CEO Steve Easterbrook for engaging in a consensual relationship with a subordinate. And just over an hour ago, McDonald's confirming the departure of its chief people officer, David Fairhurst. In response to the CEO's exit, only one firm downgrading the stock so far, Piper Jaffray cutting its rating to a hold, saying changes of this magnitude can be disruptive. With us now is the analyst behind that call, Nicole Miller-Regan. Nicole, great to have you with us.
Good afternoon. Thanks for having me.
Why is this so disruptive when the guy taking over is basically Steve Easterbrook's mentee? It's the guy that he brought in, he hired, he trained. Chris Kempczinski has been part of that push towards online ordering and digitization.
It just changes the risk profile. In all honesty, feeling okay with the governance and the protocol and how this went down is one thing. On a go-forward basis, it's totally different. This is a big-scale global brand. No one can come in and flip the switch today and change a strategy. So anything that Chris is going to do, that's going to be inheriting the Easterbrook strategy over the 12 to next maybe 18 months in terms of menu and delivery and marketing and digital, etc. But the flip side of that is that he is not Easterbrook, and he had his own leadership style. And he also had vast amount of global operating experience. Not to take anything away from Kempczinski, but the point being, he has been in the U.S. operations, and a lot of the good ideas have come from outside of the U.S.
Do Do you see this as an opportunity for others, competitors, to gain share?
I don't always necessarily think that McDonald's has to lose for someone else to win. A great example is QSR. That could be a reasonable thing for an investor to rotate into. You're still in limited service. You're in quick service, which is taking share. You're in a franchise concept, and they're doing incredibly well with the Impossible Whopper and the chicken sandwich at Popeyes. It's certainly good news versus not good news.
All right. So in terms of McDonald's, though, Nicole, I mean, do you see this as any sort of cultural problem? I mean, when you heard about the chief people officer leaving, did you connect the two dots at all? Are you getting any information from the company as to how you should read that?
We are absolutely not saying that. So I think the Easterbrook legacy, when the book is finally written, will show that he actually has laid the foundation of the digital footprint that will actually carry McDonald's forward. The important part of what happened today is a policy was violated. It doesn't really matter how or when or where or why. And this is the way that it had to be handled. So I think in that regard, we are not saying anything about the dominant brand equity, global footprint of the McDonald's that will carry forward. We also just can't say that momentum will just continue forward just because. Leadership changes, there's a domino effect, the risk profile changed, it's not the end of the world, it's just a stock that's going to be very range bound, and there's many, many other places in restaurants to get massive upside potential.
If someone was to say, this, I'm not sure about this, maybe this sounds like somebody who is maybe looking to downgrade the stock. The stock's been kind of broken lately, and then this was just the impetus to make that move today and have the excuse of Easterbrook's leaving to do it.
Yeah, I think that's a fair assessment, and we did get that pushback today. It really reads like we're taking this leadership change in isolation, and nothing does happen in isolation. But in our vast experience, and we look back and echoed this comment in our research, the majority of times you have a leadership change of this magnitude, the stock will be flat to down. The investor really will not miss much by taking some off the table for the next 6 to 12 month period. And I think it needs to be a much more proactive approach. So while the stock did well, overall QSR is doing well. And franchise concepts re-rated from unloading all their stores during the last 5-year period. None of that changes. So in isolation, this really is about today's leadership change.
Nicole, thank you. Nicole Miller-Regan.
All right, coming up, tech stocks have outperformed financials and just about everything else this year, up 37%. Up next, we'll hear from an analyst who says Wall Street banks deserve the same valuations as Silicon Valley's tech giants. Plus, Leon Cooperman gets teary-eyed when discussing his feud with Elizabeth Warren. We'll have all of those details of his emotional case against Warren's wealth tax. Stay on Power Lunch.
This CNBC program.
This is someone making an online booking at Ford.co.uk using the words Ford20 so they can service their Ford for £20 less. And this is someone who didn't get their Ford serviced. You see, at Ford, we use Ford genuine parts and Ford trained technicians. Plus, if you quote Ford20 when you book with us online, you can receive £20 off. Book now at Ford.co.uk or visit your local participating dealer. Ford service. No one knows your Ford better.
Retail customers only. At participating Ford dealers. Cannot be used with other promotions. T's and C's apply. Search Ford service for more information.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, College football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
to the
it.
Sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA Today to start listening.
Welcome back to Power Lunch. Financials, one of the best performing sectors in the past month, up 7%, outperforming the broader market as rates rise. And well-known Wall Street analyst Mike Mayo of Wells Fargo Securities argues in a new note today that banks should be valued more like tech companies. Mike Mayo joins us now to explain. It's nice to have you back. I mean, you're taking the get up a little too far now. First you sliced the tie off on Squawk. Now you've got the hoodie. We get it. You're partly a tech analyst. But now you're going overboard. You want banks to be valued the same way as tech companies?
Well, wait.
I mean, hello, the growth is with the tech companies. That's why they have the valuations, the multiples that they do.
Okay. Well,
what am I missing?
I'm still a bank analyst, but you can't be a bank analyst without being a part-time tech analyst, hence the hoodie. Maybe every third day I can wear this. Look, tech is transforming banking like never before, and the evidence was in the third quarter results where banks kept expenses flat, and that helped banks outperform for the last 1 month, 2 month, and year to date for our favorite names, Citigroup, Bank of America, and JP Morgan. So the core theme is that bank earning streams are less risky, more annuity-like, because technology helps to keep costs in check. And if you go back to historical relationships between ROE and stock prices, banks would be 30% higher. So that's our core theme. So what's new? We looked at 1/3 of the bank businesses in the consumer business and compared them to 13 tech companies. And we said, you know what? That 1/3 of the bank business should be valued like the tech stocks, closer to a price to earnings ratio of 20 instead of the 12 that banks get. Now we get it. This is blue sky analysis. Every company always wants to be valued like a technology company.
Of course. I mean, like Domino's, they're at the forefront of their technology and mobile ordering and all this stuff. So they should be valued like that too, and not a food or restaurant stock. Starbucks, I can think of like a million other examples.
But I guess what I'd say is do the math. Do the math. So the technology firms grow 3 times faster, but adjust that for the pre-tax margins at banks, which are 3 times better. Compare that to the retention of customers at banks, which are 3 times better. Adjust that for the scalability of banks, and actually the pre-tax earnings growth for the last 3 years for the largest banks versus those tech companies has been the same, yet those tech companies trade 50% higher.
Has been the same as the tech companies. The growth has been the same as the tech companies?
Yes, pre-tax earnings growth has been the same as the tech companies, which trade 50% higher valuations. No one's buying or selling the stocks on that thesis alone, but this intrinsic value shows through the bank earnings over time, and you'll see quarter after quarter, year after year, we think the operating leverage, revenues grow faster than expenses, and one reason is because of the moats around the bank businesses are underappreciated. These customers are sticky at banks and a lot more sticky than at these tech companies.
You sure you're not trying too hard? I mean, you got to outperforms on all the big banks. You'd really love for the stocks to go up more from where they are, be more appreciated by investors. How do you respond to that?
Well, I've never cared about being appreciated by investors.
I don't care. I'm not you personally, but these bank stocks. Yes, they've had a good run recently, but
no, I mean, this is not back to normal. Banks, look, remember, I was negative for 15 years, 17 years on the banks, through the financial crisis until a few years ago. I've been on your show all along here.
Right, I know.
Okay, now look at the returns that banks are generating relative to their price-to-book ratios. Based on historical relationships, they should be 30% higher. So just getting back to
History,
normal.
including prior to the financial crisis?
Absolutely.
The price-to-book should be able to reach the same as pre-financial crisis?
Absolutely. The people are comparing bank stock prices to the last decade. The last decade, banks' performance was lousy. Now it's good. You've crossed the line between destroying value and creating value. And once you create value, look at bank stock valuations during those prior periods. And so a lot of things are lining up. Getting back to normal, tech controlling expenses like never before, that's the core tech theme. You look at tech companies, 1/3 of banks are like tech. They should get some higher valuation, or at least it shows intrinsic value. And then if you want to throw in there the greatest value investor of all time, Warren Buffett has his greatest overweight in U.S. banks in his life. I'm telling you, a lot of things are lining up here for banks.
How about another Warren? What if Elizabeth Warren or Bernie Sanders get elected? What sort of discount on valuation should banks get?
Well, there's certainly political risk. As far as the...
I mean, just a little bit.
As far as the proposed bank tax, that would hurt earnings by estimated 4%. So there's your number. Upside, 30%. Downside, it's certainly there, but we're still buyers of the big banks.
All right, good stuff. Good to see you.
Thanks for having me.
All right, Wells Fargo Securities' Mike Mayo joining us.
In a hoodie. Check out shares of Boot Barn, a retail success story. It is up 120% this year. Can the stock keep on kicking? We'll ask the company's CEO. He will join us straight ahead. And Uber set to report results after the bell. Should you hitch a ride with Uber? Our traders' takes are next.
Does your broker offer more than just free trades?
Hello, Vitality Health Insurance.
Oh, hi. Is it true if I join Vitality, I get de facto 5-star rated cover, can speak to a GP 24/7, get rewarded for staying active with things like Starbucks coffee, get a little sausage dog to live with me, and you could beat my current premium by up to 10%?
Absolutely. Except one of those.
It's the dog, isn't it?
Yeah.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Minimum monthly premiums, terms and conditions apply.
15, 10, 5, touchdown!
Tonight, TuneIn has your Monday night NFL football with the Dallas Cowboys at the New York Giants. Kickoff at 8:15 p.m. Eastern.
He's at the 5 on the hash mark, running into the end zone. It is a touchdown. He gets the high snap. He rolls out of the pocket. There's a short pass across the way. It's caught by Albert Wilson at the pylon. He goes into the end zone. Touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Uber gearing up for earnings after the bell today. Its third release since going public. The stock is a poster child for weaker appetite for unprofitable IPOs, and it has fallen 7% in just a week. Let's bring in your Trading Nation team today. Matt Maley of Miller Tabak and Boris Schlossberg of BK
Asset Management. Matt, we got about half a year's worth of history with this stock. It has not been a pretty picture, but how are you viewing it right now on a technical basis?
Well, you know, as you mentioned, it's hard to look at most stocks when they've only been public for 6 months or so. But this one is a little bit different. There are some definitive lines I think that we could keep an eye on, and that's the recent high and the recent low. So on the resistance side, if you get above $35, it's recent high, and if the earnings can be a catalyst for that, that's certainly going to be positive. It's going to give investors a lot more confidence in the name and probably squeeze a few shorts, more than a few shorts. On the negative side, however, though, if you roll back over and the earnings are a catalyst for a dive in the stock and it drops below its 28.5, its recent lows, or basically its lows since it went public, of 28.5, that's going to be a big problem because I think it leads a lot of people to just throw in the towel on the name. And I'm glad you mentioned the IPO market because, this whole thing with Uber and Lyft, and then, of course, the whole blow up in WeWorks, this is going to be very, very important. If we see a major breakdown in Uber over these earnings report, that's going to have implications for issuers, for banks who make a lot of money off these IPOs, and the like. So 2020 is going to be very dependent on the IPO market on how these some of these stocks are reported the next few days or next few weeks.
Yeah, so something approaching a little bit of a make or break for Uber and the group, perhaps. Boris, as it sits right now, it's about a $50 billion market value, maybe half of what some of the aggressive estimates were saying this company could get before the IPO went out. Obviously, there's not a lot of illusions here that this is a wonderfully profitable business right now, but how do you view it in terms of on a forward-going basis from this valuation?
I don't think it's a profitable business, period. That's the problem with Uber. It's basically an unsustainable economic model as it's run right now. And the great hope of self-driving cars is pretty much a pipe dream at this point. The technology and the compliance liability issues are still very far away. So I think it's very difficult to imagine a strong fundamental case for Uber. Now, it could have better earnings or, a smaller miss as it goes into the numbers, and it could give it a pop. But the one thing that investors should really remember is that you have a lockup period coming up in 2 days. And if you look at any history of the recent stocks, Beyond beat its number, lockup destroyed the stock. Lyft actually did better, lockup destroyed the stock. And there's a lot of supply coming out in Uber the moment that the lockup goes away. So even if it does beat today and it gets a pop, I think it's going to be a sell 2-3 days forward.
All right, we will see after the close today. Matt and Boris, thank you very much. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back over to you.
All right, Mike, thank you. Ahead on Power Lunch, Boot Barn soaring more than 120% this year. Was this stock made for buy-in? We'll sit down with the CEO next. Plus, teaching convicts to code. Tyler's in San Francisco sitting down with the founder of a company that wants to get prisoners out of their cells and into Silicon Valley. And Leon Cooperman firing off on Elizabeth Warren during an emotional interview saying billionaires are being unfairly vilified. We'll bring you all the details. All this when Power Lunch returns.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
During bull markets, many traders find themselves attracted to small cap stocks because they have a tendency to have a higher beta, meaning they generally move up faster than the broader market. But don't overdo it on the small caps because they're also more vulnerable to pullbacks. I'm Joanna Payne, and Schwab is the better place for traders.
Okay.
It's another Monday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
to the
it.
sideline, the man, Fleet, for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News Update at this hour. E. Jean Carroll, an advice columnist who has accused President Trump of raping her in a New York City department store dressing room in the 1990s, has now sued him, saying he defamed her by calling her a liar whom he had never even met. Carroll is a longtime advice columnist for Elle magazine. The CDC is warning about a multi-state salmonella outbreak linked to ground beef. It says at least 10 people from 6 states have been infected with what's called Salmonella Dublin, a more severe strain than the typical ones. 8 people were hospitalized and 1 death has been reported. They have not identified the supplier of the tainted beef yet. And a funeral was held today in Detroit for longtime Michigan Congressman John Conyers, who died last week at the age of 90. Hundreds of mourners attended the service, including former President Bill Clinton.
I remember, I think John Conyers is the first person that ever quoted Frederick Douglass to me in saying, "Power concedes nothing without a demand. Never did and never will." He understood that.
You are up to date. That's the news update this hour. Guys, I'll send it back to you, Scott.
All right, Sue, thank you very much. Take a look at the markets right now. We'll give you a check on a day where the Dow hits a new high for the first time since July. S&P's higher. Dow's good by 115. It's the Russell that is about a 1% away or so. It's up 9 points, 0.5%.
Time for today's power movers, starting with Under Armour, the company disclosing a federal investigation into its accounting, whether it shifted the timing of sales to improve quarterly results. Also, it cut revenue guidance for the rest of the year. Next, Stryker is buying Wright Medical for $4 billion. Both companies make medical devices, including products for knee and ankle replacements. The deal to buy Wright would help grow Stryker's market share in products for upper extremities. And Twilio lowering its earnings outlook, blaming a calculation error. Twilio had already lowered that guidance once last week when it reported results.
Let's send it over now to Tyler Matheson in San Francisco at the CNBC at Work event. Ty?
Scott, thank you very much. And indeed, I am in San Francisco, where it is an absolutely beautiful day. We're looking at the future of work. And one place where the future of work is being written today is a very unlikely one. By next year, there'll be 1 million unfilled tech jobs in this country, and a lot of them are in coding. And the gentleman you're about to meet, Chris Redlitz, a venture capitalist, founded a group called The Last Mile, which teaches convicts in prison in San Quentin how to code and then get some jobs when they get out. Chris, welcome. Good to have you here. How did The Last Mile start? When did it start?
We started in 2010, and I was invited into San Quentin, which is pretty close to San Francisco, to do a talk to a group of men about business and entrepreneurship.
They wanted to learn.
They wanted to learn, and a friend of mine was doing some mentoring there, and she said, "You know, a lot of these guys have questions I can't answer. Would you come in?" And my first reaction was, no. Why would I want to go into prison? I'd never been into prison before, and I sort of believed what the current perception was about no hope, no career, no path in prison. But I relented and I did go in. I went in one night and I was really planned to do about a 30-minute talk. That 30-minute talk turned into about a 3-hour discussion. And what I discovered there was there's a lot of talent, desire of people inside who really wanted to build a better life after they served their time. Guys were actually handing me business plans they'd been sitting on for a while because they had no one to give them to. So that was sort of the aha moment in sense of how it started and what we could do.
And these were felons, some of whom were in for assault or weapons charges or gang-related or murder, homicide.
Everything.
And you taught them coding. How do you teach coding in a prison where there is no internet?
Well, it's a big challenge, right? We can't have direct access to the internet. The men can't. You know, I say men today, we're in men's, women's, and youth facilities. But we had to create basically a simulated environment where they could actually have similar tools but not have direct access, and that's what we have today.
How many graduates so far, and where are they now?
So we've educated over 500. There are over 70 that are in the workplace today, mostly in California, but they're working for technology companies and non-technology companies, but many of our recent grads who are now software engineers in software companies in San Francisco.
So you've educated 500, 70 are in the workplace. Where are the remainder? Still in prison?
Yeah, most of them are still inside because there is a period of time that we educate before they get out of prison.
Before they get out. Let's talk about recidivism rates. Mm-hmm. What is the average recidivism rate in California prisons, for example?
You know, it's varied between 50 and 60%. And that was really a disturbing number for us when we started getting involved. Like, you're investing in people, they're coming back to prison. That's a bad investment for taxpayers.
So what is the recidivism rate of those 70 who are out in the workplace so far?
We have not had one person reoffend at zero today.
Zero?
Zero.
And some of them are making incomes from what to what?
Well, we have people in the Valley as software engineers that are making six figures.
Six-figure salaries.
Six-figure salaries.
They have come out, they have learned a skill, they have put it to work, they are not going back to prison. How are you expanding? Are you expanding outside of California into other states as well?
We are. Today, we're in 5 states. We're in 19 classrooms. We're in Indiana, Kansas, Oklahoma. We just opened in Michigan. And our goal really is to be across the country in the next several years. We want to be in at least 50 classrooms in the next several years.
Who pays for this?
You know, it's a combination of government, but mostly private sector and foundations. It was really important that we engaged the private sector. Google is a big sponsor of ours, Stand Together, Chan Zuckerberg, Kellogg Foundation, the Simon family in Indiana. So it's really a combination of some government funding, but really more private funding. And it was important for us to establish these public-private partnerships that would really engage the business community.
Chris Redless, thanks so much for being with us today. Congratulations on your good work. And Melissa, we're going to meet one of those graduates who's going to tell us his story later today here at the At Work conference in San Francisco. Back to you all in Englewood Cliffs.
What an amazing story. Tyler, thank you. Tyler out in San Francisco. Still ahead, we're sitting down with the CEO of Boot Barn, this cowboy-centric retailer, soaring 120% this year. Unfortunately, Tyler will miss out on this one. He rocks a good cowboy hat, I'll tell you that much.
There he is.
But there he is, looking good.
Wasn't going to miss that opportunity.
He did want to say a quick howdy before we head to break.
At Work is brought to you by Workday. Workday, built for the future.
I heard you guys have Workday now.
Yeah, they're a great partner. They're always there with insights and guidance. It's like having a business caddy.
You good for golf on Saturday?
Can't. Closing the books. Team's already finished. Took half the time. And I'm back in. There's an opportunity in New York. What about boosting production? Hold off till spring. Not this quarter.
Workday, a finance, HR, and planning partner like no other.
Opportunities aren't always obvious. Sometimes they just drop in. CME Group can help you navigate risks and capture opportunities. We enable you to reach global markets and drive forward with broader possibilities. CME Group, how the world advances.
Right. Thank you for that, Bob. But I think it's time we go with GBTC. It's Bitcoin exposure through a traditional investment account. Nice rock.
It's time to drop gold. Go digital. Go grayscale.
For farmers here, this is our life's work. But when a recall happens, perfectly good food goes to waste. Now we've got a way around that.
Looks good. We're on target.
Blockchain on the IBM cloud helps pinpoint a problem anywhere, from farm to shelf. It's used by some of the biggest retailers everywhere. A nice wedge, so more food ends up on your table.
Is that Daddy's lettuce?
And less food goes to waste.
It was Sophie's big day. By the way, she's the next Mozart. As usual, we were behind schedule. But Sophie's enthusiasm could not be dampened. Not even by a runaway donut. We powered through it in our Toyota Prius. Because the stars gotta shine. No matter what.
It's unbelievable what you can do in the Prius. Toyota. Let's go places.
There's the consumer economy, which is red hot, as we'll hear later in the show when we talk to a couple of companies. And then there's the industrial economy, which is weak and in many cases getting weaker. Fortunately, the consumer economy is a lot larger than the industrial economy in the United States.
Welcome back to Power Lunch. Billionaire investor Leon Cooperman has been involved in a war of words with presidential candidate Elizabeth Warren about her wealth tax. Earlier on the halftime report, I spoke to Mr. Cooperman about his issues with Ms. Warren.
I don't need Elizabeth Warren telling me that I'm a deadbeat and that billionaires are deadbeats. The vilification of billionaires makes no sense to me. The world is a substantially better place because of Bill Gates, Michael Bloomberg, David Rubenstein, Bernie Marcus, Ken Langone. This is idiocy.
Now, he didn't just criticize Elizabeth Warren either. While Cooperman said he is happy with President Trump's performance on the economy, he disagrees with some things the president has said. I asked him if he was going to support President Trump's reelection.
He has to become a president for the entire country and not just his base. So if I was him, if I'm not prepared to change my behavior, I would take a victory lap and not run again.
Well, the most striking thing about the interview is how emotional Mr. Cooperman became during part of it. Watch.
I mean, I think it's kind of obvious people can not only see the emotion on your face, but hear it in your voice when you talk about this, Lee. Why?
I care. That's it.
That Leon Cooperman. Our wealth editor, Robert Frank's been closely following the Cooperman-Warren back and forth. He joins us now. I don't know how he could make his case that he cares any more than that by his outward emotion on the screen.
Yeah, it was an incredible interview, Scott. I urge everyone to go online and watch the whole thing. What surprised me about this also was that what really made him cry wasn't the fact that he has to pay a wealth tax, which is what everyone on Twitter is saying. What made him cry is that the country is being torn apart by divisive language on both sides. And he said, look, I'm willing to pay more. I believe in a progressive tax system. I believe the wealthy should be doing more. But the wealth tax is not the way to do it.
You know, he is, it's hard not to, sort of defend who he is based on the fact that I've gotten to know him. We all kind of have. He's been a fixture on this network, and I think all of us know what he does in terms of trying to lift people up. This conversation really is about that at the end of the day. It's about trying to make capitalism open to everybody and have it, maybe it does need to be fixed.
Yeah.
But give everybody a chance to be as successful as he is and Dalio is and these others who he wrote about and who've spoken on the issue. He's giving his money away. He has the Cooperman College Scholars. He's sending 500 kids to college. He believes in access to opportunity as much as anything else. He's doing his part. He said it himself. Elizabeth Warren's picking on the wrong person here.
It seems like the debate is in how to make capitalism work for everybody, how to close that that wealth divide that affects our country. I don't think it's about whether or not to have that wealth divide, but how to do it. And their approaches are very different. He made it clear, I'm doing things, but I would like to give away my own money and not have the government give away my money.
And I think that distills a fundamental disagreement that is tearing not just the country apart, but the Democratic Party. And that is, he had this terrific quote from the economist Thomas Sowell, who said, what is your fare of what someone else has worked for? Right? That's number one. Elizabeth Warren said, Leon, you didn't build that. The school teachers that taught you, the roads that were built, the bridges, the infrastructure that allowed you to become a billionaire, that's what made you. There's no such thing in the Elizabeth Warren world as self-made billionaires. So therefore, you need to give back a lot. And that's the argument that I think the country is having. And that's why I think he quoted Jack Kemp as saying, Americans admire the wealthy, they want to be them. I don't know if that's as true today, certainly in the Democratic primary season, as it was years ago.
This whole issue around these two words of fair share are really the lightning rod when it comes to this conversation, because as Cooperman says, fair share, I'm giving away everything. I've done everything that I can in my life to be a success and then give back. Yeah. What is fair share?
Well, what is fair is, should he be making the decision about how those billions are spent, or should the broader public be making a decision? Now, some people say, okay, to argue that billionaires should get more and therefore control the way it's spent through philanthropy, as opposed to giving their tax dollars to a country that will then democratically decide how it should be spent, they may not have the same priorities. So people would say, in that sense, just saying I'm giving back through philanthropy doesn't really cut it, because that's not truly the way democratic wealth should be distributed. And that's the argument on the other side. Yeah. But you're right. Very few people have done as much as him and the people he named to improve the lives of those at the bottom.
There's also part of this conversation, and this snark on the other side of it is, oh, you say you're so charitable and you give so much money, so you think you deserve like a break or something like that, or you want sympathy for it.
Or praise.
It's praise. That's not what any of this conversation is in any way about.
He's only saying these things because he is forced to at this point. He's being called a deadbeat.
Right.
So he's defending himself, and I think justly, in this case.
More to come.
Yeah, it was a great interview.
No,
People need to watch the whole thing.
Thanks, Robert. All right, we're going to continue to our coverage on the war on wealth with the Prophet's Marcus Lemonis. He's been investing millions in companies across America. He's going to be with us for the hour right here on Power Lunch ahead of his newest season of The Prophet. That's tomorrow at 2, and you don't want to miss that.
To the bond market now. Rick Santelli tracking all the action at CME. Hey, Rick.
What an interesting day, Melissa Lee. Look at a one-week chart of 2-year. Hey, yields are moving up nicely in the short end. But it's the fact that we're in a bear steepener that might give pause that rates might be moving higher for longer. Look at a July start to 10-year. We're getting back to that zone. Anything above 1 3/4. Remember, the last closing high of significance was 190. Bear steepener, rates are going up, long end leading the way. Just to give you an idea, 2s are up 4, 10s are up 6. 30s are up 8, double what 10s are on a net change for the day. Of course, the curve steepening. Let's look at a 10s minus 2s. It's basically the steepest since the end of July, hovering just a whisker under 20 basis points. And finally, let's look at what boons are doing. And do keep in mind that over the last month or so, we've gone from 7 and 10 securities in Europe being negative yielding to only 6 and 10. It's starting to whittle down. And look at a June start of boon yields. They're about half of what they were at their worst level at minus 71. Christine Lagarde had her first major press conference today. Things may be changing in European securities markets. Scott, back to you.
All right, Rick. Appreciate it. Thank you. All right. If you don't wear a cowboy hat or cowboy boots, you may not know about Boot Barn, but you will have missed out on a major retail success story. That stock's up more than 120%. The company's CEO about to join us. Y'all come back now, you hear?
The Bond Report is...
This is the sound of Helen and Peter hiking to the fairy tale fortress high above the winter wonderland below. Or it would be, if they hadn't stopped at the first beer house they came to. There it is, Helen and Peter. There's your Incredible. Fly from London Gatwick to Salzburg from £29 each way. With British Airways, Incredible is within reach. Terms and conditions apply. Limited availability and dates. Fare quoted as each way based on a return. cba.com/Gatwick for details.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
This week's On the Media.
We really need to start framing this differently.
The way we report the story of the California wildfires, like blaming the power company, obscures the underlying structural problems.
I despair that our contemporary politics can in any way deal with the challenge that this century presents us.
Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right? This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
What does the word partner really mean? Someone I can trust. Who's with me for the long term. Who understands I'm dealing with lives, not only livelihoods. That in order to help people, I need more than products. I need quality support and insights. Can I find someone who partners with me to achieve people's long-term success? With Capital Group, I can. Talk to your advisor or consultant for investment risks and information.
Nobody would be crazy enough to build a boat out of glass. But I would, using these heavy glass panels and only Flex Glue Clear. Not only does Flex Glue's powerful adhesive hold the entire glass boat together, but it's virtually invisible. Now that's Flex-tastic. Get Flex Glue Clear or any of the Flex Seal family of products at FlexSealProducts.com.
When you look at the world, what do you see? We see patterns, relationships. When you use location technology, you can see where things happen before they happen. With Esri location technology, you can see what others can't.
I chose to become an independent registered investment advisor because it gives me more freedom to act in the best interests of my clients. In other words, as a fiduciary, not just in the moment, but comprehensively and continuously. We are always thinking about you, the client. We are always responsible, always accountable, always looking out for you.
Charles Schwab is proud to support more independent financial advisors and their clients than anyone else. Visit findyourindependengadvisor.com.
While most brick-and-mortar retailers are struggling, shares of Boot Barn have been riding high, up more than 120% in the past year. The Western apparel retailer has caught the attention of Wall Street. Retail analyst Oliver Chen placed Boot